In today's video, we're going to break down the new Fannie Mae and Freddie Mac loan level pricing adjustments. So basically, this is going to affect you if you plan on buying a home after May 1st, or even if you plan on refinancing. So whether you're a homeowner or you're a new home buyer, after May 1st, this is going to affect you. So you want to stay tuned. There's actually another adjustment coming in August, so stay tuned to the end of the video so we can talk more about that. But before we get there, if you are planning on buying a home after May 1st, if you have a low credit score, you're going to be in a better position. If you have a good credit score, you're going to be in a worse position than before. Now, the first thing I want to do, if you Google this, there's a lot of misconception and a lot of polarizing headlines that are going to make it look like if you have a bad credit score, you're going to get a better rate than if you have a good credit score. That's not the case. So let's just put that aside for now. If you have for example, a 660 credit score, you're not going to get a better rate than having a 760 credit score. So if you planned on ruining your credit to get a better interest rate, that's not going to happen. It's not going to help you. It's just to get clicks and just to get a good polarizing headline. But let's look at the charts and see the difference of a rate that you're going to get if you're planning on buying a house. So I'm going to try to make this as simple as possible. Now, the first chart we're going to look at is the difference in the rate and cost of getting a mortgage compared to before. Okay, so it'll make more sense when we see the chart. So let's just dive in. All right, so here, everything that you see here that's in a red, that means rates have gotten, or fees have gotten worse. Anything in the green means your rates have gotten better. So first things first, if we just look at the low credit score tier on the left, so if you have a 660 credit score or lower, you're gonna, if you slide over to the right, and then the top part is your loan to value. So how much down payment you're putting. So 95 means you're putting 5% down. So if you're putting 5% down and you have a 639 credit score or lower, your fee on the loan is gonna be 1.75% better. Now, what they're doing is trying to help low and middle income home buyers get a little bit of a better rate, pay a little bit less in fees. This borrower, for example, who was putting 5% down and had a 639 credit score in the past, it was almost impossible for them to even get a conventional loan backed by Fannie Mae or Freddie Mac. Today, or not today, but after May 1st, coming up in a week, their fee on the loan is going to be a lot better than before. Now, if we just go up, if you had a 660 credit score and you're putting 5% down, you're saving 1% in fees. So, for example, if you were going to buy a $500,000 or let's say a $550,000 house and you were going to put 5 or 10% down, you're going to save 1% of the loan amount in fees. So if your mortgage loan was going to be $500,000, you're going to save $5,000. That's a big chunk of change. If your score was 700 to 719 and you're going to put 5% down, you would save 0.625%. So again, just to give you an idea, if your mortgage was $500,000, you'd be saving $3,000 in fees. Now here's the red. This is important because these are the people who are kind of getting screwed in this scenario. So again, these numbers are the difference change from previous. So this is how much of a higher fee this borrower is gonna pay compared to what they would have paid before. Okay, so if you have a 720 credit score and you've done a good job to keep a good credit score, or you have a 740 even, and you're putting 15 to 20% down, the cost of your mortgage is going to be 0.75% higher. So if we take the same example of a $500,000 mortgage, you're going to pay $3,750 more in fees to get compared to what you would have paid before. So you're going to pay almost an extra $4,000. So this sucks if you have good credit. You're going to pay a little bit more than what you would have paid previously. Now, again, the goal of this is to they're taking from the people with good credit and they're helping the people with worse credit to balance these fees because the money's got to come from somewhere. So unfortunately, if you have good credit, you're not going to get as, you're going to pay a little bit more in fees than you would prior. Now, this does not mean that you have to pay the extra $3,750 in fees, for example, if you fall into that category. Basically, what that means is now you have to choose a little bit of a higher rate to cover that cost, to cover that fee. You have to get a higher interest rate. So again, a lot of people, obviously with good credit, this sucks. It doesn't make a ton of sense. Why would I have to pay more if I have good credit? I'm with you. You're basically being punished for having good credit. But again, don't go off ruining your credit thinking you're going to get a better interest rate by having a lower credit score. That's not the case. Now, if you're someone with a lower credit score, under 680, if we look at this chart again, if you have a credit score under 680, you're benefiting from these adjustments, right? So look here, majority of the green is if you have a 679 credit score or below. So if you fall into this category and you're putting, whether it's 5, 10, 15, 20, 25, whatever your down payment is, up to 30%. If you have a low credit score, you're benefiting. Okay, so it's good for low to middle income with bad credit. If you've got your shit together, you're going to be in a little bit of a worse position. It sucks. It is what it is. Now, one other thing that's happening is there's going to be another pricing adjustment coming in August, similar to this. So you definitely want to stay tuned. If you haven't already, if you find any value, please hit the like button, subscribe to my channel. We talk everything wealth, real estate, crypto, stock market, and so on. So hit the subscribe button because you don't want to miss that video that's going to be coming out. There's going to be another pricing adjustment coming out in May, so you don't want to miss that. Thank you guys for watching, and I'll see you on the next one.